Energy, one of the top S&P sectors today as traders assess a failed insurrection in Russia. The group's still the worst performer of the year, and our next guest says energy stocks remain vulnerable, though there are some bright spots. Victoria Greene of G Squared Private Wealth joins us right here at Post 9. It's good to see you.
Thanks, Scott.
So we're up 2% as a sector today, but down 10% on the year. What's your outlook?
I think energy is going to remain under pressure. We haven't been able to see oil prices break out of this range they've been trading in all year. We've been bouncing around between 70 and 80, one break up, couple breakdowns, but there really haven't been this catalyst. And while energy companies have been extremely shareholder friendly, and they're not wildcatting anymore, there isn't this drill baby drill mentality. It's cash baby cash back to their investors. But still, it's a tough sector because you're up against speculations, you're up against oil price, you're still concerned on that recession, and then China's been moving so much slower. So you're seeing these energy stocks just really struggle to get momentum of how they're going to grow profits if oil prices remain anchored.
Is there a part of the space that you do like, even in the face of everything that you just said, which is decidedly negative?
Of course, there's always bright spots. You know, one of the companies we love right now is Cheniere. It's a LNG exporter company. They just signed a new deal with China. They've been exporting into Europe, and I do think energy security is a long-term play. Companies did not like countries didn't like what happened to them after the Russian invasion. People really care where they're going to get their stockpiles from. And so I think Cheniere, the natural gas export play, and then I also like SLB. It used to be Schlumberger, but they changed their name recently. The international drilling does remain more active, even while the shale plays are slowing down a little bit.
Pivot to the market, if you would, for me. Second half of the year looks like what? From somebody who tried to get more optimistic on the market within the last, I don't know, 6-8 weeks, I think?
Yeah, and right now we're hitting a bit of a wall. If you even look at what the average street forecast is, it's about 4,500. We're pretty close to that. We're 4 or 5% off. And so I look at this and I say, if we have 2 more rate hikes, if this was a pause, not really a pivot, then you're up against an uphill battle, and you had such narrow breadth. I think we're in for a lot of volatility. That being said, July is this historic.
The VIX is like 14.
Yeah, I know. Well, a low VIX is actually pretty good for stocks.
Yeah.
Volatility, meaning yes, we should bounce around a little bit. But look, the Nasdaq's been up in July 15 of the last years. The S&P's been up the last 8 years in July. You have a lot of good technicals in there. We stay above this 43.19. We stay above 4,200. You have good technicals. We just need earnings to cooperate with us, and that's a wild card. You know, we're getting all this liquidity sucked out of the system. What are the banks going to show us in mid-July? I think that's something we got to look at. And then all this AI frenzy. At some point, you got to start making more profits from your AI. So you got to make sure you can back that up with a little better earnings.
I think the NDX, by the way, as Jonathan Krinsky was pointing out today, hasn't had a down July since 2007. Yeah, and sort of given what, obviously those stocks have done coming into July, it's primed for a pullback.
It is.
But you suggest otherwise. You say there's too much technical momentum behind that trade to turn back now.
Well, don't fight the tape, right? It's almost like don't fight the tech. You don't fight the Fed. You've got a lot of technical support here, and you also have the FOMO rally, the sentiment rally. You have cash coming off the sidelines, and you have your historical precedents of July being a stronger month. I'm not saying it's going to be as strong as June. We've had a lot. I feel like earnings, a lot of this performance got pulled forward here in this first half of the year. So I just think second half is going to be a lot more volatile. Maybe we'll get that VIX up to 20, get it off this almost historically low 14, as you pointed out. But I think you really have to see what's under the hood here in earnings, and we kind of got this liquidity put from the Fed, and they weren't necessarily actually putting money into the system, but they inadvertently put money into the system when they bailed out the banks in March, and that put more money that's going to get sucked back out.
How many more hikes can the market withstand?
At least 2. I mean, the market's withstood the last 500 basis points. What's for another 50?
Okay, we'll see. We'll leave it there. Victoria, thank you.
Thanks, Scott.